The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we got 4.5 months until tax time. How do you like that? How's that something to make you depressed? And we're going to talk today about things that are important for you to think about with 4.5 months left to go in the tax season, because really every day is tax season, because you're always creating that next year's return. You know, that's obviously the 2019 return. And we want to help you. That's what we're all about. And I got joined in studio, my compadres, Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey there, Esther. Happy Saturday. Yeah.
Happy Saturday. You know, and I found out the other day, for all my life, I thought I was Italian, right?
Right.
My whole life, I thought I was Italian. My dad used to say at the dinner table, Tom, what are you? My brother say, Italian, Dad. Angela, what are you? Italian, Dad. Esther, what are you? I'm Italian, Dad. Okay, so then I did the Ancestry.com thing. I'm 4% Italian. I'm like Eastern European by DNA.
Wow.
And so I told my brother, and he said, that's got to be wrong. But I'm going to a party tonight, and I'm going to bring my proof. So that'll be...
Are you bringing vodka?
No, that doesn't drink. But anyway,
What I was going to say is I was counseling with one of my clients yesterday, and I was like, well, you should change your retirement and put more into your 401k because that make a difference. And he's like, oh, no, it's too late. It's almost September.
Oh, my
and
gosh,
I'm
it's
like,
not too late. It's not too
gosh,
late.
yeah.
But that's what we want to talk about. And we want, of course, at the beginning of the show, we want to talk about tax school that's coming up.
Yep. And so our tax school starts about October 10th, 11th, and it meets twice a week, either in the mornings or evenings. There's also an online version, and you learn taxes from A to Z. It's free of charge.
Z.
Yeah,
right?
it's free of charge. You do have
stuff.
to purchase the book or the workbook, and it's a great opportunity. The hope is that you'll work for us at one of our 31 offices, and so it's a great opportunity to learn taxes. And like I said, we teach you everything from A to Z, and it's a lot of fun, and we really break it down.
I mean, in the winter, let's face it, it's dark from the time you get up until the time you go to bed, and this gives you an opportunity to get out of the house, meet wonderful people, do a wonderful service to people. And obviously, first-year people are not on the front lines. They're kind of in a novice position, but it's the beginning, and because taxes are so confusing, and if nothing else, to take it for your own use is an absolutely great thing. So if you're interested, you can go to our website at egtax.com, and we have a place on the front page of our website which talks about tax school, and you can register online.
That's
or you
right.
can call us.
Yep, or you could call us and we'll email you the registration form or mail it to you, and you could also call and we could register for you over the phone.
Right. Okay, 803-0930, 803-0930, star 930 on a cell phone. And so before we get to your phone calls, and I see we have calls coming in, what the first thing I want to talk about is that the individual mandate for your health insurance, the penalty's gone.
That's right.
And so there's kind of a yin-yang with that. The good thing is nobody has to worry about the penalty if they don't have health insurance. What would the bad thing be?
Go ahead, Chris.
The marketplace is still there, and if you do get assistance with your health insurance, you have to do that 8962 to do the account reconciliation to see whether if you got enough subsidy or you got too much subsidy during the year.
Yeah, so New York State is really kind of a leader in health insurance for people. And so New York State is still very actively involved in helping people who can't afford health insurance, and so that's called a subsidy. Well, at the end of the year, even though there's no penalty for you not getting health insurance, you still have to reconcile any subsidy that you got from the state of New York to help you to pay your health insurance against what your actual income is when you told everybody when you first signed up that qualified for the subsidy. Did this really happen? Because people that kind of underreport their projected income is going to end up owing, not the penalty, but they're going to end up owing back health insurance payments that basically the state of New York helped pay for.
Right. And that could be something that affects you. Just maybe on December 20th, you won $5,000 in the lottery. Well, that's great, but that just killed your health insurance subsidy, and you may end up paying back that $5,000 because of the health insurance subsidy.
Right. And the other thing is, because the subsidy's gone, where people might not have claimed their children as a dependent on their tax return, right? Won't that kind of play in, because now that isn't going to, well, it could affect the subsidies, though, couldn't it, Chris?
It could affect the subsidy if you're able to claim your children, and that means they have no income. They may be entitled to Medicaid anyways.
Well, yeah, that's what I was going to say. A lot of my clients that had kids that lived at home, I didn't claim them as dependents because they would have lost their Medicaid.
Right.
The kids would have lost their
Yep.
Right.
Yep.
I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone, and you can text us at 3930. And Tiff, you were just
Yeah, I was going to say that, the individual mandate on your tax return, I hope it doesn't help to preclude people from not getting health insurance. I think
and that's the other thing. Sitting in New York State, you have to understand that New York State is one of the highest tax states. I think it's like number 5 or 6 in the United States. And part of the high taxes you pay is because New York State offers so many perks that other states don't.
Right.
And one of those perks is the health insurance. Now, how many people have you guys talked to that qualified for a subsidy from New York State, but they didn't know who to ask, so they never asked anybody, and they went without health insurance? But had they asked, they could have gotten something as little as nothing, where the state of New York paid for everything, or as low as high as $20 a month.
Right. I mean, no lie, probably 100 of my clients alone would qualify for $25 a month health insurance or lower.
So the bottom line is, if you don't have health insurance, there is a Santa Claus, and I will tell you, you really should call. We have EG Health Connect. Tim Eliason is there. He will help you walk through it. This is a no-charge service. So if you have no health insurance, if your kids have no health insurance, instead of pre-deciding that you can't get help from New York State or there's no help for you, there is help for you, right?
Right. There absolutely is.
Right. Or if you want to retire early, and one of the things is the health insurance, there's ways around it where he can help you by tax planning and other things, where your health insurance may not be as expensive for a couple years as you think it would be.
Right, absolutely. Okay, we're going to take a short break. 8030930, 8030930, star 930 on a cell phone. We'll be back on the other side with your calls. We are family. I was watching the Birdcage the other day, and I said, "Wow, that should be our theme song. We are family," because that's what we want to let you know, that we care about you. You're not dollars and cents to us. You're somebody that we want to serve, and to us, your family. So that's why we played that intro there. Let's go to the phones. Again, 8030930, 8030930, star 930 on a cell phone. Text us at 3930, and we have a gentleman or lady hanging on line 1.
Hey, Ed.
Ed.
Yes, okay. I have a question for you on capital gains on selling a house.
Yeah.
Buy the house for $200,000, you sell it for $400,000. What are the capital gains consequences?
Did you live in it at any point in time?
Yes, and actually I'm calling for a friend
But how did they live in it for any period of time?
Yes. But
For how long?
they're in Salt Lake City, Utah.
But how long did they live
Is
in
it their
Ed?
primary residence?
Yes.
Then it's tax-free.
Hey, up to $250,000 tax free.
If they're filing
single.
a joint return, it's $500,000 tax-free. If they're single, it's $250,000 tax-free. If they lived in it 2 out of the last 5 years as their personal residence.
Okay, simple as that, right?
That's it, and they're going to be very happy.
Okay, thank you.
All right, are they coming back to Western New York, Ed?
They're thinking about it. That's what they're considering right
Tell
now.
them that they can afford it because there's no taxes on their sale of their house.
They figure they can get a place over here, a condo for about $150.
That's true. That's true. And if they're retired, are they retired now?
Yes.
Yeah, I mean, the first $20,000 a piece on a joint return is going to be tax-free for their pension or their annuities, and all of their Social Security is going to be tax-free. So from a retirement standpoint, New York State retirees do pretty good.
And what about New York State taxes? Is there any consequence there?
Well, that's what I'm talking about. The first $20,000 that they get from their pension, unless it's a federal pension, which would be completely tax-free, is going to be tax-free to them, each one. So if he's got an IRA, takes out a $15,000, and she takes an IRA out of $15,000, and they have Social Security, they will pay no taxes to New York State.
Very good. Thank you.
All right, thanks, Ed.
All righty.
All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and you can text us at 3930. We were talking before, Chris, that you were saying that somebody says it's too late, or was it you, Tiff, that said
Me.
it's too late to make the contribution to your pension plan?
Yep. Yeah.
But that's not true. It used to be you could put in a percentage of your wages into your qualified pension plan. Now it's called an elective deferral, which means you can basically come up with a lump of money, and as long as it's under the maximum contribution to your 401k or 403b, you can do it in one lump sum.
That's right. That's right. And the reason why they came into tax plan is finally he got his Social Security disability. So he got this large lump of money, and we tried a lump sum election. However, it doesn't pan out. So he was thinking of putting money into an IRA. And then we talked about his wife putting more into her 401k. But what you speak is absolutely correct.
So if the 401k base has increased this year, up to $19,000 with a $6,000 catch-up provision. So she could write out a check for $25,000. They would then stop paying her wages, right?
Right.
Until she hits $25,000. And that would go right into her 403b or 401k plan at work. And in effect, it's like she didn't make $25,000, which will really help the taxability of the Social Security.
Yep, absolutely.
Right?
Yep, because that's what it's all based out of. Exactly.
So that's on the 401k, and the IRA base has also increased this year, $6,000 up from $5,500 with a $1,000 catch-up provision. So you could put $7,000 in your IRA, which maybe that as long as he's got wages of or of course he's going to piggyback off his wife's wages, right? If he doesn't have any, so he could do a spousal contribution. So she could do the elective deferral up to 25. He could put $7,000 in an IRA, and that would be very sweet.
Yep, that's what we looked at. Absolutely, using
Right?
the spousal
So is that what they're
IRA.
going to do?
That's what they're going to do. That's what they're going to do.
Because when you put money away in your pension plan, even though it's going to be taxed later, and again, it's, with the high standard deduction, many people that were rushing to put money into Roth IRAs, they're never going to get a benefit from it because they're not going to pay taxes when they take their money out of their IRA anyway because of the high standard deduction. So if you do enough tax planning, you're going to find out that you really can really skin the cat, so to speak.
And that's what it's all about planning. It's all about
And
planning.
that's why
And what do we charge to plan?
Zero, nada, zilch, nothing.
Right, so you can call EG Tax during the week and you don't even have to bring donuts or anything like that. I mean, we just really want to help you. And you can call us or you can come in person, and we will sit down with you and make a plan. And again, we got 4.5 months till the end of 2019. Right?
That's right.
Okay. And let's go back to the phones. We got Tammy. Hey, Tam. How can we help you, dear?
Hi. I had heard you say to the other caller that the federal pensions are not taxable
On New York State.
on New York State.
Right.
But federal, yes.
But on the federal, it's very taxable.
Oh, gotcha. Okay.
Yeah, because I was talking about New York State being such it really is, for
Kind.
as high as the property taxes are and the sales tax, the seniors in New York State really do get some great benefits.
I see.
Okay?
Okay.
Yeah,
Yes.
Tammy was running outside going, oh my gosh, my federal
Well,
pensions
but I
are
can tell you, recently I amended somebody's tax return because they went to a CPA and they had only subtracted $20,000 of their
On New York State.
$40,000 pension, whereas it was a government pension and it was all excluded. And so if you're
But
over the
again,
age,
it was the state, right, Tiff?
it was the state. Yep.
Yeah.
So you.
But that's
but
the
that
whole
was
thing,
a
you know.
mistake.
That's what's so great about doing this kind of a radio show. It makes everybody think about stuff. So now Tammy's going to say, "Oh," but at least she listened. That's
right.
great.
And it's all tax free on the state.
All tax free on the state. On the state of New York, your pensions, IRAs,
Social Security.
your non-government pensions, IRAs, annuities, the first $20,000 a piece. Husband, $20,000, wife, $20,000. So up to $40,000 a couple is tax-free, provided you're over the age of 59 and a half. If you are receiving a federal, state, or local pension, regardless of your age, it's all fully taxable on New York State.
Right. Yep.
Okay. Let's go back. And again, 8030930, 8030930, star 930 on a cell phone. Text number is 3930, and we have Tom. Hey, Tom.
Hey guys, I'm on Social Security disability. My girlfriend was on Social Security. She's on regular Social Security. She's 69 years old. She passed away on November 13th, which is a Tuesday. On Wednesday, we got paid. We both got paid from Social Security. They took the money out about a week later. I did her taxes in January. She got about $1,100 back. That came to me because I'm the executive or whatever. About a week ago, I got another check in the mail for Social Security for $1,728. That's the amount she was getting per month. They said they made a mistake. She was entitled to that money. My question is, do I have to amend her taxes and put that in there, or do I have to?
No, it'd be in the year received. You received it in 2019. There is no, she's under the minimum filing requirements, so you don't have to file a tax return. And since you're the executor of the estate, you're going to use it as she would have directed.
Good question.
Okay, Tom?
Thanks.
All right. Sorry to hear about your girlfriend. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and our text number is 3930. Other things that have changed this year is your health savings account contributions have gone up.
Right.
Right, Mr. Chris?
That's
Yep.
right.
Now
Right.
to 6,000.
A 3,500 for single, 7,000 for family. So
Right.
$50 per person, basically,
Right.
for the husband and or wife. Children don't count.
Right. Now, the itemizing for people that have medical expenses are a little harder this year because the threshold moved from 7.5% that they take off of your medical bills to 10% of your adjusted gross income. So if your adjusted gross income last year were $100,000, they would have reduced your medical deduction by $7,500. Now they're going to reduce it by $10,000. So that's a bad thing, and that is another change that you want to look at. And don't assume that just because you heard that the standard deduction is so high that you can't itemize. That's not true. You still have medical. Taxes, it's true, are capped at $10,000. Mortgage interest is still deductible on your primary, secondary, and home equity, provided that it was used for home improvement. Charity is still deductible. Casualty losses in a federally declared disaster area, and miscellaneous itemized deductions, which includes gambling expenses and things of that nature. So those things are still deductible, even over and above your if it is more than your standard deduction.
Right, and
And of course, on New York State,
you can take your business expenses,
Right.
your lawyer fees for taxable income and things like that.
exactly right. Exactly right. All right. I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break for the news. Our phone number here in studio is 8030930. 8030930, star 930 on a cell phone, and you can text us at 3930. See you on the other side.
We are family. I got all my sisters with me.
Hey, we think of you as family, and you don't have to be sisters either. You can be brothers too. I'm Esther Golias, the tax lady from EG Tax, and we love to help you. You know, I can't think of anything that you spend more money on, really, on a consistent basis, than settling your tax debt each year with the federal and state of New York. And we want to help you to make sure that you pay what you're supposed to, but not overpay. And we see it all the time. Within this month, wasn't there at least 2 or 3 people that came in and you saved over $10,000
Yes.
from?
Oh, yes.
You got them money back because their returns were done incorrectly?
Yep, and that's a wonderful feeling. It's a wonderful feeling. I feel like it's my gift, our gift, and we're really good at it.
I mean,
helping
you
people.
go back, you meet in the kitchen and you high five each other. I just saved somebody $10,000. It's wonderful. I mean, and we're not talking about a deduction of $10,000. We're talking about they're going to get an extra $10,000.
talking
Or
about
some of these people got
amending.
bills from the IRS of $17,000, and when we're done, they get a refund, not a balance due.
And actually,
I
mine
mean,
was
it is so
25,000,
remarkable.
not 10.
Pardon me?
And mine was actually 25,000, not 10.
Oh, only 25.
Only
yeah,
20.
So, yeah,
Only 25.
25,000.
Well, you know,
Wait, I want to know. Did you go to Burger King yet to eat the meat-free hamburgers?
no.
No, but that's very important for the environment, right? Right, because the
So
CO2
I think they say you
reduction.
have a smaller carbon footprint, right?
Right,
So you don't fart
smaller.
as much or something. I don't know.
Right.
I don't know. I mean, so you get to eat. I was reading an article that says that and this is true if you haven't heard it,
Right.
that they're genetically modifying something out of a chicken feather. They're taking the DNA to make something that is going to be meat-based. Ugh.
Why
Anyway,
don't
all
just
right.
become a vegetarian or a vegan, you know?
They're probably going to genetically modify carrots.
Right, but the vegans are protesting because you're still using chicken feathers.
Yep, isn't that something?
Yep.
And okay,
But-
so we have 4.5 months until 2019 is over, and so we're here kind of talking about today some things that you should pay attention with. And I'm going to tell you, Monday is coming around. That's a good time to start, right?
Right. You know, we were talking before the break about itemized deductions, and you know, a lot of people can't do it now. And if you're a senior over age 70 and you give money to charities, your church or other charities, you may want to do the qualified charitable distribution coming
That's a great tip, Chris. Absolutely.
right.
Absolutely.
Yep.
So explain why that's so important.
Right, because what you can do, you can take up to $100,000 out of your IRA, give it to charity. So that
And
money,
it fulfills your RMD requirement.
yep, fulfills your RMD, but it doesn't count as income on your tax return. So, I mean, that's a
So
win-win.
obviously, if you're somebody that's philanthropic, right? So, I mean, to just go take $100,000 out of your IRA and give it to the church or whatever charity you want to do, or the People Against Meat society or whatever it is. I mean, for you to do it, and you weren't going to do it to save the money on taxes makes no sense.
Right,
But,
and it doesn't have to be $100,000. It could be your
Right.
$2,000 charitable.
but let's say that normally at Christmas time you give $5,000 to charity, and you have an RMD that you have to do required minimum distribution from your IRA. You can just basically contact your bank or financial institution and say, I want to do a qualified a charitable contribution, and they're going to take that $5,000 if you wanted to do $5,000 and give it directly to the charity. Then you fulfilled your RMD requirement and you don't pay taxes on it. So it's absolute, and especially if you didn't itemize, it's really a great way to maximize you minimize your tax liability.
Right, and also for seniors, it can help reduce your income for the enhanced star.
That's right.
For IRMA, for people who are higher income and always get hit with the extra Medicare tax coming out of your Social Security, that could be a way to keep your income down so you don't have to pay that extra for Medicare every
Right,
month.
and IRMA is not
A nice Aunt Irma.
Right, right, or the Hurricane Irma. It's
Right.
IRMA. What does that stand for? Do you know? It's your health insurance.
It's your health insurance through Social
contribution
Security.
to the Medicaid.
Yep.
Right, Medicare portion.
Yep.
All right, let's go back to the phones, and we have
Miguel.
Hey, Miguel, how can we help you?
Yeah, I just had a question. We're thinking about selling our house. We live in Depew, and our agent told us we could probably put it on the market for like $340,000.
Wow.
We owe $150,000 on the house still.
Yay for you.
Wondering, do we have to pay capital gains on that?
Have you lived in it as your own personal residence 2 out of the last 5 years?
Yes, we lived here for the past 12 years.
Then Miguel, you are being so blessed. There's no taxes at all. You just walk away with $190,000 tax free.
Is that because of the dollar amount of $340 that you're selling it for, or does it matter?
No, it's the gain.
If you're
The gain-
married, it's
the-
a gain of up to $500,000 is tax free.
Right. And you don't have to buy another house. You don't have to buy a house of greater value. You can sit off on the sidelines for a couple years before you buy another house, or maybe you don't want to. That is completely tax free.
It's a great way to walk away
It
with
is. I'm going to
tax-free
tell you,
money.
You know, people ask me all the time how to reduce their tax bill, and here's this great. I have every kind of person calling me today. And here's this great tax deduction that's available, and people don't take advantage of it.
So the law is, if you're a married couple, you get, as long as you live there for the last 2 out of 5 years, $500,000 tax-free. You don't have to worry about it unless your gain is greater than $500,000. So Miguel, you guys are good.
So how's that for good news, Miguel?
Absolutely. I'm happy now. I just made my...
All right.
Now you can go get crab legs for dinner.
That's right. $190,000 richer. I hope you guys sell your house for $340,000. I hope you get a bidding war and sell it for $360,000.
Yeah, 1 second. Go ahead.
It kind of disappointed me because now the tax lady that we go with either A, lied to us or didn't know. She told us that we had to stay where we were for at least 4 years, right?
No.
It said 4 years.
And not claim any...
and not claim any...
My dear, you need to go to a different tax lady. I'm a good tax lady.
you.
Anyway, no, you're completely good. I mean, this is not rental property. This is your personal residence, correct?
Yes.
Yeah, then you're good to go.
2 out of the last 5.
Congratulations. Okay, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text line is 3930.
IRMA stands for International Rehabilitation Medicine Association. That doesn't
That
sound-
doesn't
go.
sound.
No, yeah.
I know, but that's what they charge you when
Yeah.
you start making too much money. The other thing is we're talking about if we got four and a half months before tax
Oh,
season.
wait. Tim just texted in. Sorry, our
Yes.
healthcare
Oh, you
navigator.
jumped on that.
Income-related monthly adjustment.
Oh, then how is it that different?
Google.
No, there's different. There's
Different Googles.
There's different meanings for IRMA.
Oh,
there was
okay.
like 5 different options. Yes.
Wow. Okay. Well, I'm sure Tim's got the right one.
Uh-huh.
All right. Let's talk about alimony. If you have had a divorce finalized this year or modified, and and you're supposed to pay spousal separate maintenance or alimony, that after 2019 going forward, how much of that alimony is taxable?
None, which is very exciting. So no longer do you have to pay taxable. You pay tax on the alimony, but the worst part is the person who pays it doesn't get that adjustment to
No,
income.
how about on New York State?
On New York State, that would be taxable.
Taxable, right?
Yep.
So on the federal, the alimony is going to be tax-free going forward. New York State, the alimony is going to be taxable and deductible to the payor. So if you're in the middle of a divorce or divorce modification and you're supposed to be paying alimony or spousal maintenance, you want to make sure that you talk to somebody so that you know how this is going to affect you, because a lot of people are very confused on that.
Right. I mean, the new tax law between the federal and the state is very confused. I was talking to a car salesman today, and he's like, "Yeah, I know. I always get yelled at by my tax person because I don't save my receipts. I don't keep track of my mileage." And I said, "Well, 19, from your 18 and going forward, the federal, it doesn't matter. It's only on New York State. And so you got to pay attention to what's going on so it's your money. Keep it in your pocket."
And then here's another example. I was tax planning with somebody, and it's a brand new client, and he was coming in for his parents, and regrettably the dad passed away, and they are high charity people, and under the new Trump reform they didn't itemize, but next year she's going to be a single person because regrettably her husband, who's passed away, and so she's going to itemize in 2020. So in 19 she's not going to itemize, but in 2020, all things being the same, and they have long-term care insurance, they're going to itemize. So you really want to pay attention to that.
I mean, there's so many
Planning.
there's so many things to you should really pay attention to, and that's part of what we offer. There's no charge. You can call us at our corporate headquarters in Tonawanda at 1890 Colvin, and we will sit down and roll out the red carpet, because our job is to save you money. Because like the theme song says, you are family. All right, other thing that you should watch out for is with people doing, people are just not working on a job anymore. So a lot of people are doing Uber, they're doing Lyft, they're doing Instacart, and you have to be aware of all of your other forms of income, because that's all has to be taxed too. And especially if you're doing self-employment like Uber, Lyft, or Instacart, where they're just paying you cash, they're depositing cash into your checking account, they are going to send you a 1099 at the end of the year. And why is that important for people, guys?
Because that's got to get reported on even if you don't get a 1099, it's got to get reported on your tax return. And if you don't do it and a 1099 was issued, the IRS knows about it, and then you will get a bill for the gross income, not the net.
So let's say you made $10,000 doing Lyft, when the IRS gets a copy of the 1099, they're not going to think, wow, I bet you Jim had expenses to do this Lyft. They don't do that. They just say, okay, here's $10,000, you're in the 20% bracket, you owe FICA, and they just send you a bill for like $3,500 plus penalty, and you go, oh my gosh, I can't even afford to do this. Well, you are entitled, just like the last caller, that their tax person didn't know that the first $500,000 of the gain of a personal residence that they lived in 2 of the last 5 years is tax-free. The IRS doesn't know your situation either, but you're entitled to reduce that self-employment income by your self-employment expenses. And weren't you impressed really last year with Uber and Lyft that they really gave an accounting of the mileage right on the 1099s?
Yep.
And they didn't.
Yes, they
did.
They did.
Oh, they didn't. Okay. Yeah, they did.
No, they did. I
Okay.
was very impressed. They had all the expenses boiled out there. Now, there might have been more mileage that the Lyft driver put on or the Uber driver put on than they would have known, because maybe they had to go from their home to someplace that Uber didn't know. But by and large, those expenses are there, and you put them on a Schedule C to reduce your taxability. So multiple income streams. And those of you that started little self-employment, maybe you did your very own you know, where what do they call that when the truck goes out? The truck. Food truck. Maybe you started a food truck. All that kind of stuff is deductible. You know, people are doing all kinds of great self-employment ideas, but come tax time in 4.5 months, you want to make sure you saved all your receipts.
Right.
Correct?
Definitely.
All right. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. And our toll-free our text number is 30930, and we are going to take a short break, and we'll be back on the other side.
With your calls,
With your
Robert and
calls.
Elizabeth.
All of the people around us, they say, can they be that close?
Hey, we are family, and to us, you're our close relatives. And I will tell you, after doing Ancestry.com, I see I have a whole bunch of relatives that I didn't know anything about, and I thought I was Italian, but I'm really Eastern European and Russian. Who knows? Maybe I was involved in the Russian scandal, you know. But anyway, that is a really cool thing. For those of you that have not done it, I think it's on sale now for like $59, and it is really interesting to see your ethnicity.
Chris just spit in the bucket, so we're going to find out in a couple of days.
Maybe you're Chinese, Chris. I mean,
There we go.
No, you don't know. It is unbelievable. My entire family came from northern Italy, and everybody spoke Italian, and they were all named Angelo and Guido and all that stuff. They lived like Italians, and they were from like Croatia. So it really interesting. Okay, let's go back to the phones, and we got Robert. Hey, Robert, how can we help you?
Hi, Esther. I have another question about the capital gains on stuff.
Yeah.
If you're a retirement age, let's say 70, does it still hold the same rules, or is it?
Yeah, it's the same rules. Now, the standard deduction is higher, you know, and a lot of your Social Security might not be taxed. There's a lot of things that go into the cake, so to speak. But yes, if we're just talking about capital gains in general, that doesn't change based upon your age. The capital gains that we were talking about from sale of personal residence, that's again has nothing to do with your age.
Okay. All right. Thank you.
All right, Robert. Thank you for calling.
Yeah, it's funny. A lot of people think when you reach a certain age, you don't have to file anymore, but it really has nothing to do with age. It's the schmatka, the money, the income, all that, the dineros.
That's right. If you got the cash, they want it.
Uh-huh.
Okay, let's talk to Elizabeth. Hey, Elizabeth, how can we help you?
Hi. I have a question on I know everything changed on deductions.
Well, really, everything didn't. Mostly the taxes changed.
Right.
You know, the tax deductibility was capped at $10,000. That really was the big chink in the armor. And the second thing was the miscellaneous itemized deduction. Like, for instance, if you were an employee paying employee business expenses and brokerage fees and stuff like that. But that was the major change. The big thing was the personal exemption was gone. And so they doubled the standard deduction, got rid of the personal exemption. So you know, the rules really did change, but the itemized deductions are still in there if you can come up past that standard deduction.
Well, usually when I get my taxes done, I fill out all the papers separately for deductions and staple the receipts to the back of them.
Well, that's good.
And they're usually stapled on the back of the booklet I get.
Okay.
And I called the tax preparer and asked if I have to bother because this paper, he didn't staple it. He left it in the folder. And I hadn't gotten an answer, and I wanted to know. My husband's an over-the-road truck driver, drives doubles.
Is he self-employed or is he an employee?
He's an employee, and we used to be able to.
That's you're one of the people that we talked a lot about last year. The miscellaneous itemized deduction subject to 2% limitation for people that were incurring business expenses, specifically over-the-road truckers, really, really hurts them. And so we have a solution, though, Elizabeth, if you or your husband could call us, we would be very happy to call his employer to show them how, if they reimburse him for his expenses, and kind of cut his wages commensurately, he'll end up with a better tax situation because there is no deductibility for his employee business expenses over the road anymore.
Oh, his employer would never do that. Never.
But it doesn't cost them anymore. It's absolutely the same money. So let's say he was getting paid $100,000 and his expenses are $20,000. So what they do is they pay him $80,000 and give him a $20,000 reimbursement. It's the same $100,000.
Actually, it
But
saves the employer money because it's less payroll taxes.
Exactly right, because the employer pays less payroll taxes. I mean, we're very happy to talk to people. It's out there. You'd be surprised if you sometimes people are so entrenched in what they knew, they're afraid to try something new. And we're very happy to help them. So if he feels like doing it, Elizabeth, we'll be very happy to talk to his employer.
All right. Thank you very much.
You're very welcome. Have a great day.
You too.
Right. I mean, people are so hard-headed.
Yeah, and the new tax reform, what do we have, another 4 years?
Well, who knows? I mean, they're always in negotiations.
It could change in a month.
Yeah,
Right,
and of
that's
course, he can still deduct those things possibly on New York State, so make sure.
Right, and of course, Elizabeth needs to know that those are deductible on New York State.
Right.
So what wasn't deductible on the federal is deductible on New York State. So all of those expenses, if you're a tax accountant, didn't take them on New York State, you want to look into that. Now, it's not going to be as lucrative as the federal, right?
Right.
So if he ends up with $20,000 in deductions at 6%, he's going to save what?
$1,200.
Right? But I'm not going to walk away from $1,200.
Oh, no.
Right? Okay, let's go back to the phones, and we have Larry. Hey, Larry, how are you, sir?
Very good. I got a question on Social Security I thought maybe you could help me with.
Yeah.
I started collecting Social Security when I turned 62 a couple years ago, and my wife turned 62 next month, and she's going to start collecting.
Mm-hmm.
Can she collect on half of my Social Security while she's allowing hers to continue to grow until she's full retirement age?
You used to be able to do that. I would check with Social Security. It all depends on how long ago you did it because they did change the laws recently.
Yeah, I've been reading something about if you were born before January 1st, 1954, they kind of grandfathered people in on that.
Yep. You could call Mike Hayfleck from the financial guys.
Because he's a Social Security
Guru.
specialist, and he would give you the lowdown on that.
Okay, very good.
Why don't you give him Mike's phone number, Chris?
633-1515.
Okay, very good.
All right, thank you. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I know we're getting close to the end here. Other things you should look at is paying your quarterly estimates. Take a look at your quarterly estimates. But more than anything, the federal government has come up with a tax estimator on their website, which is really good because if you were unhappy with your refund last year, if you continue to do what you're doing, you're going to continue to get what you got. So if you go to the IRS website and look at their estimator, you'll be able to see how much in withholding you need to have in order to get the refund that you think you want. I will tell you, getting a big refund, is that a great thing for people?
No.
Not at all. They're
much-
using your money, and you have to wait for them to give it back. And they can ask for all kinds of proof before they give it back. If you change your W-4, and again, this is something that we do at no charge. If you change your W-4 so that you get a smaller refund, you get the money as you earn it, and you don't have to beg for your money back when you file your return.
Especially New York. I can't tell you how many New Yorkers still haven't gotten their refund. Yesterday, I was on the phone with somebody who still hasn't gotten her New York refund because they wanted proof of her withholdings. And so she lit into the New York State Examiner. She's like, I just wish you would do your job. And I'm sitting there twiddling, listening, and thinking, oh my God, she's giving him a what for? So anyways, control your refund and don't make it huge.
You really can. I mean, if you had a refund of $12,000, really what you're doing is giving them $1,000 a month of your take-home pay to let them hold it, and they're giving you zero interest on it, and you cannot use it, and you're out charging on your charge cards at 25% because you don't have the money. So What you really want to do is change that W-4 so they're not getting that money, so that you have the money, and at tax time, you're closer to breaking even.
Right.
That's right. That's right, for federal and for state. I mean, I'd rather see people put more into their 401ks.
That's exactly
Yeah.
right. With that extra money, if you can contribute to your 401k, it's so good, because if you're not planning on dying, you're
Or
going to
health.
really wish that in a short period of time here,
Right.
you're going to really wish you put your money away. And it's so important that you start planning not only for taxes, but for your retirement.
Absolutely.
The other thing is,
Absolutely.
there are lots of people that I know that are listening who haven't filed their returns, and maybe in 2018, maybe 17, maybe 16, maybe 15. And do we help people with that?
On Monday, I'm helping somebody who hasn't filed for the last 5 or 6 years, and he's got like 15 rentals. On Monday, I might not see the light of day. I don't know.
But I mean, when you come in, we do not shame you. We do not make you feel bad. There's one lady that we did, I think was 15 years, maybe 20 years ago, 15 years ago. And she comes in every year. She's one of the first clients, because once she got straight, she stayed straight, you know? And that's part of what we want to help you. I'm working with another client right now who hasn't filed in 3 or 4 years. Now, he got a letter around April the 15th that says that they're looking to garnish his wages. And one of these days, he's going to find out that they have issued a garnishment letter, and then his life is going to come to an end as we know it, because he hasn't been proactive. The important thing is for you to do what you can, because if you think they forgot about you, they didn't.
Not at all.
All right. Well, if you want to come to tax school, you can go to our website at egtax.com. If you need the best tax help, and a lot of the stuff we do is no charge, give EG Tax a call. You can go to our website at egtax.com. Until next week, I hope the thunderstorms don't get you. I'm Esther Gullius with Christopher Fabian and Tiffany Fabian. God bless you. Have a good week. Bye-bye.